So, Mark, what's your read and interpretation on this job report and what it means for big tech?
Well, for tech across the board, which includes a lot of high growth, speculative names where their value is in kind of the terminal value of the DCF or the earnings really come in the out years, rising interest rates are a negative. And then when you have a day like today, which makes you think that interest rates may not rise so rapidly, it's a positive for that group. So tech now has got a pretty broad range of kind of enterprise legacy tech to kind of premium high quality growth tech. That's where kind of the FANG names would fall in. And then you still have your speculative names. The big trade today was inflation risks cooled off. Now it's safer to buy those high growth, more speculative tech names. And you'd expect this trade every single time this job numbers comes out. The question is whether we're going to have a positive or a negative surprise.
How much growth in jobs do you see happening in the tech sector in particular as we come out of the pandemic, knowing that tech in general has fared better than basically any other sector?
Emily, I think what you just said is absolutely right. There were some structural winners in tech from the COVID crisis. That sounds crass, but it is true. Some of these companies have had or will have higher growth rates, like the big super tech names that reported last week. I'm not sure about Apple, but Microsoft almost certainly, Google, yes, Facebook, yes, Amazon, yes. They're all growing faster, not because of COVID, but because of all the conditions around this last year. Their growth rates are faster. So they're going to be the biggest employers. They're going to be hiring, adding the most people, particularly Amazon. I think it added 400,000 to 500,000 next year. I think that number this year is going to be 200,000 to 300,000. Very different types of employers than some of the other employees and some of the other firms will be adding. But yes, there's going to be a lot of employment growth out of tech, and it's a good thing.
So, we are coming out of big tech earnings. I believe we are almost near the end. And generally, companies have performed well. If you look at the FANG stocks, again, surprising us, it seems like digital advertising is back. What are some of the highlights to you?
Well, what I find interesting is that digital advertising is definitely back. Instead of a U-shaped recovery or a V-shaped recovery, internet advertising was a checkmark shaped recovery, i.e. growth rates in the December quarter and then the March quarter we just printed, they were faster than what we had prior to COVID. And I think one of the big things that's really happened here, and to me, one of the biggest new insights that I've had is it's that dramatic growth we've had in new business formation. We've had greater growth in new business formation in the last 9 months than we've had in decades. COVID unfortunately destroyed small businesses. COVID then turned it out and created a lot of small businesses, and all of those businesses pay their utility bills and they start their marketing campaigns. And where did they start them now? Today in 2021, they start them on Google and they start them on Facebook. Those two companies have been major beneficiaries, and it's powering a lot of internet advertising growth. The one company that didn't have acceleration was Twitter, and that stock's been taken down.
What about Amazon? You cover Amazon as well, and they're moving Prime Day forward in order to possibly continue to catch some of that pandemic demand. But the general belief is that as we get later on in the year-over-year comps will not look as good. What is your outlook?
Yeah, no, you're right. You're going to have, they're entering into tougher comps. What's so interesting now about Amazon is they gave their guidance for the June quarter. The market knew that the March quarter was going to be really strong. The question was, what was the June quarter outlook? eBay gave you guidance that said now their retail sales are going to decline year over year. Amazon is essentially saying that they can sustain the same sort of growth rate that they've had pre-COVID. In fact, they're going to grow a little bit faster COVID, even on really tough comps. That tells you how much of a structural winner they've been. But in terms of the stocks, we had these big mega cap blowout earnings, and the stocks didn't really move. And to me, I think the market is sort of waiting until we can focus on 2022, because right now, this is the peak GDP quarter because the comps are so easy last year. Yes.
Mark, I got to jump in here because we are right now watching a surprising press conference at the White House. This is President Biden's job cabinet coming out and speaking to reporters on the back of this disappointing jobs report. They've just come out of a meeting with the president. So, of course, in his jobs cabinet, we've got Transportation Secretary Pete Buttigieg, Marty Walsh, Secretary of Labor Jennifer Granholm, Secretary of Energy Gina Raimondo, Commerce Secretary, and Marcia Fudd in Housing and Urban Development. Obviously, this jobs report was a huge shock to the markets today, a big miss, one of the biggest misses in decades. Mark, when something like this happens, when, it's not just a miss, but it is a big and unexpected miss, does that cause a greater feeling of unsettlement across the industry? I mean, nobody likes surprises, and I wonder if that makes companies in general sort of question the risks they're taking.
I think you're right, Emily. I'm sure it does. I'm sure this kind of volatility it's hard for business planners to figure out what their capital expenditure budget should be, what their hiring budgets should be. It is just one data point. I mean, these numbers can be squirrely from time to time. And I think the overall read, at least from the tech sector, is going to be, we are recovering. Demand is recovering. Demand in the end markets is recovering. Even some of the weakest parts of the economy, hospitality and tourism and automotive, those areas are recovering. The question is just the pace at which it recovers, not whether it's going to recover or not. So yes, there's uncertainty here, but the general direction, I think most people agree on, and that we'll have increasing recovery as we go through the year.
I wonder if, too, tech is in a unique position because you're seeing more companies allow people to work from home. So the big concern has been, when there is this return to the office, some people aren't going to want to return to the office. Google looked like they were going to take a stricter line on this, but just came out this week saying, actually, we are going to let our employees work in a hybrid mode. Mark Zuckerberg has very much embraced this idea. How does that change the jobs dynamic for Silicon Valley?
Well, one real direct insight is Silicon Valley as a geographic center may become less important. If employees can work remotely, that doesn't mean they have to work from San Francisco. That doesn't mean they can negate the San Francisco to Palo Alto commute. That means they can think about a Boise to Palo Alto commute. I.e., you can now these jobs can be much more remotely located than they were in the past. I could see that at some level reducing the appeal of San Francisco, Silicon Valley real estate. I don't know if that's a good or a bad thing. I think that's just a reality, especially as work from home and some sort of hybrid work from home, work from office becomes much more prevalent.